Well, what an eventful week in the markets. And by week I mean Friday. But what was happening before Friday that could lead to such a massive piece of downward price action is what we'll be thinking about today. I saw some people commenting on Twitter that for the Nasdaq to lose that many points in a single trading session was a 4 sigma event. Now I understand that has something to do with how often something happens, its range of probability, and they said that something that happens that often is something like once every 4,030 days or something like that. You might expect an event of that magnitude in terms of the decline in price in a single session like we saw on Friday. So it's supposed to be really rare. Once in 4,000 days sounds a little too rare. And obviously the higher markets go, the higher they're inflated, the more they can fall in points terms in a single day. So, the stock market falling. Well, let's bring up the Nasdaq chart or the Tech 100 chart, which is our closest thing. Let's have a look. So in one day we fell 4.6%. Apparently that's like the rarest thing in the world. It never, the Nasdaq never does that. Fair enough. But obviously 4.5% of 30,000 is a lot less meaningful than 4.5% of 3,000. Back whenever the Nasdaq, if you can even imagine it being that low ever. So I was heavily short the S&P in my demo account. And last week we're talking about the breadth signals and internals and all that, and I can't quite remember what they were. I think it was a mixed bag. I went through several, and I was saying, well, this one's not confirming, this one's not confirming, this one's in the middle, blah 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 blah. But it wasn't a happy picture, tremendously overall. I mean, I was pointing out on the NIAD, you had this triple top, divergence after divergence, and we broke down. We're below the 20. NIADs again. The issue with NIAD is they do stuff to it. You'll load up the chart and you'll see a move like this and go, oh wow, well that's a matter of historical record now. That's going to leave a mark. And then you'll load up the chart a day or two later and it'll be like it never happened. They've done something. They've adjusted. They've readjusted. It's sometimes these dramatic moves on NIAD seemingly just to disappear. Someone's come in and just rubbed them out and painted in something a lot more normal looking. In any case, below the 20, below the 50, and indeed below the 200. We saw the triple top again, actually slightly more pronounced than on NIAD. Below this peak, NIAD at least exceeded this old peak. And this is your volume, not your issues. And a big plunge. NAHL. There's your triple top look again on NAHL. Big divergence on MACD. And we're back below the zero line. But we were all this rally here, I mean, it starts to go sideways a bit here. That's what makes that lovely trend line on the, if we go back to the S&P 500 chart, you've got this lovely breakdown, not this one, this one. These lovely breakdown trend lines, and you see it similarly. You can imagine drawing the trend line here on the S&P. Look how strong it was. Above zero readings. There's your positive reversal. Market was higher. Indicator was lower. I've thrown on the cumulative NAHL as well, just to see if it means anything. We shall see. I've not done a close analysis yet. Rinia, we said that it bounced back but was divergent, not confirming the new highs. There we go, we're below 60. Bullish percentage specs. closed high last week, whereas the 50AR or the A50R, I think wasn't so rosy. In any case, we've come down a little bit, diverging strongly with the highs here. We're around that sort of pivot level, 57, 58%. Yeah. And finally, the ratio of the leading sector against the broad market, but it was going all the way. There was no divergence here. There was no sense that the leading sector was starting to lag and fall behind from its previously leading role, except for this divergence here on MACD. But there were other signals. We'll get into that in a moment. Obviously, consumer discretionary against consumer staples was forewarning us quite strongly. Slight warning in the SPY against the TLT, the stocks against bonds, but nothing outrageous. But the signals were there. So I was looking to go short at some points if I could. Again, my demo account, I'm heavily short. You see the kissing of the underside of the RSI trans line. You know, here's that channeling movement. Dup, 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 dup. And there's the underside. Kiss, didn't quite manage to kiss. Little head and shoulders here on the composite RSI index. Long-term divergence on the histo. But what I want to draw attention to today is, okay, so what was the real hint that there was underlying issues with the leading sector? Why was it such a good idea to go short, at least for the moment? I mean, you see already the calls, quite a lot of calls on Twitter and social media saying, as always, this is just another fantastic buying opportunity. Everyone shitting themselves and coming in their pants about, the bearishness. The bears finally got a day. But it's just going to be another accumulation opportunity, and then we'll be going higher. Trump is going to steal money from ordinary people through their taxes and stuff it into the AI companies. To keep pumping the AI stock prices. Who knows? But again, significant divergences and, all visible plainly on the charts. But what was the key for me was, okay, semiconductors. We know that tech is the leading sector. What's the most important part of the tech sector? It's semiconductors. So maybe we ought to look to the lead of the lead, the edge of the edge, sector-wise, to see if there's going to be any trouble underneath, as the Americans say, the hood, underneath the bonnet of the car. And there was. Can you tell what it was? Yeah, it's our price-volume trend. Price-volume trend is a fantastic indicator as long as you understand its strengths and its shortcomings. Price-volume trend is not to be used, in my opinion, on sub-daily timeframes, and quite possibly not even on greater than daily timeframes. I wouldn't use it on anything less than the daily, and I also wouldn't use it, I don't think, on anything more than the daily. I wouldn't use it on a sub-daily time frame because there's too many quiet periods where the market is moving with very little participation, very little volume, and the indicator just flattens out. And then it only takes a small amount of participation to then give it, crazy readings. You get misled. The other problem it has is that after a significant down move with a lot of volume, it lags on the resumption of the uptrend, on the resumption of a bull in a bull market. Because the heavy volume on the downside is the large-scale liquidation that creates fear in the market, and then the resumption of the uptrend in the face of that fear and the generalised pant-shitting can be done on reduced volume. This is where you would see the opposite indicator, ease of movement, going off to the races. Low participation but significant, smart institutional participation, pushing the price higher rapidly with relatively low volume. So after a big drop it can lag, and you'll be looking to price volume trend to be showing strength to confirm an up move that just won't be there, and you can miss out on participation in an up rally for that reason. But it does produce, when it's moving in sync with the market, good signals. So I wouldn't use it on lower than daily time frames, and I would be careful with it after a significant down move, looking for, should I buy? I would look at other signals to see if there's going to be a continuation of an uptrend. So here it is, the leading edge of the leading edge, the leading part of the leading sector, and there's your big negative divergence on the price and volume trend, as well as on your price-based indicators, on your momentum of the price volume trend, on your RSI, left shoulder, head, double tap right shoulder. So that was encouraging for me to think I ought to be going short in the S&P on my demo account. However, look at the position now we're now in, and this is what's giving the bull some consolation. Okay, so we're smack on the 50 of RSI, and well, what could this be, a positive reversal? Well, yes, it could. The indicator's mode a lower low, price is at a higher low, and please excuse my coughing. I've been running today, and I think I've inhaled a bunch of pollen, and it's triggering like tightness in my chest or allergies or something. I don't know. Maybe I'm just unfit. And there we are. We're at support. And well, my goodness, price volume trend look is even lower. So there is technical grounds there for saying, well, maybe this is a significant low when, you know, everyone's shitting their pants and the bears are finally happy, but actually we're just going to go back off to the races, you know? That is a possibility. Watch this space. For the moment, there's not enough grounds to say that and to commit to that with trading action, but it is a possibility. So let's go back to the S&P 500 daily. I've got an MACD, a price volume trend as well. It's kind of weird. I've not been able to code it quite right in Pro Real Time using Pro Real code, but that's because I don't really know what I'm doing. I'm just happy that it's at least approximately right. But you'll notice you get the cross much sooner than you do on the price-based one. Now, in a sense, this is too soon, because look how much this rally continued. But there was no price signal breakdown, no channel breakdown. You could say that these were positive reversals on these indicators, and you were looking to other things like your measures of breadth, like your semiconductors, negative divergence on price volume trend on the daily, to make sure you didn't try shorting it prematurely. You've always got to have something else. Ideally, and price is primary. Always remember price is primary. Always with the context and the subjectivity, but that's trading, isn't it? That's why it's an art, as much as it's a technical analysis. I suppose you've got to be expecting a bounce. This prior accumulation to the last up move, the pivot for that is there, about 7,400. So that would be a target. The channel breakdown as high as 7,500. That would be a target on the S&P. I've squashed these two down right at the bottom because I was exploring around on the Pro Real Code website that you can get all sorts of indicators and widgets and gadgets and it's all free that people have made themselves in the Pro Real Time community. And I was looking for something like a parabolic SAR, but one that has a more responsive like adjustment to the momentum of the markets and doesn't just accelerate wildly regardless of the type of price action. I think I found something that approximates that. Like average true range adaptive or momentum adaptive parabolic, or perhaps not quite so parabolic stop and reverse. In any case, I found this thing that's called the PRC Genesis Matrix. And just the name alone, frankly, got me right in there. If you're bold enough, if you've got the cojones to call your homemade indicator mishmash the Genesis Matrix, I mean, it sounds like the latest Terminator movie or something. There was but smashed together with the Matrix, and it's 4 indicators, 4 trend-following indicators all put together, and I just like it, and I like the rock and roll. I never look at these things. These I have them on here for some reason, because the rock and roll is tied to price action a little more closely. So if you were getting in too soon, going, oh my goodness, it's crossed, it's under its moving average, this indicator, and oh my gosh, it's diverging, and it's under its moving averages, and it's diverging, and it's always breaking down key levels. This thing was keeping you in because it's more price signal oriented. And the same here, like it's actually 4 indicators in one. That you can see it's actually 4 little strips, and this one was saying sell. But look, that's the one that's just like too early. And then the other 3 don't join in until here. If you went down on a lower time frame, you'd have found a good buy signal there. But they kind of move in sync, because look, here's where you get the blue bar on rock and roll. Red bar's coming with red, blue with mostly red. It's funky, and I like it. And it will almost never have any impact at all on my trading, but there we go. Can you explain that? I can't provide a logical reason for it, but there we go. I just like it. I just think it's neat. It's a quote from the great Marge Simpson. Anyway, continue. I mean, you've got to continue to look for shorts until it tells you otherwise. Until the market tells you otherwise. Dollar. Again, basing, curling around, curling up. You see we've got a bottom half. We've come under the floor here. This is very clearly a horizontal price floor, a very significant horizontal price pivot. We're discounting underneath this price floor, and golly gosh, we're seeing a lot of interest, it looks like. We're seeing this strong divergence at the lows. And again, look, even within this sort of curving price actions, we get down move contrasted by up move, contrasted by down move, contrasted by up move. You're getting an internal auction line here. This is the floor within the price action under the horizontal floor. But it's a trending floor. It's an adaptive floor. Can you see how that pivot, it's like a cup. It's like the bottom of the cup on a cup and handle formation. What was resistance becomes support, becomes resistance, becomes support. It works. The principle is the polarity, the switching of polarity from resistance to support. And if it does that, it's legitimate TA. And I like being able to draw these things when you think you're seeing a bottoming process occur. So, there's no reason to doubt yet. Again, the market will do whatever it wants. It could put in a candle like that. You know, we could wake up on Monday and the market, the dollar has come down like that. Market will do what it wants. However, using what's in front of our eyes, there's no reason to doubt yet the strength of the dollar. There's the daily. Wedge action, breakout, channel, flag, bull flag, breakout. We're at some kind of resistance here. We're coming back up to this diagonal resistance on the monthly, believe it or not. Plus the horizontal pivot resistance. Will there be a reprieve? Will the dollar tank and die? Will stocks go to new highs with Trump taxpayer AI money? TBD. TBD. Silver, obviously, doing badly as rates rise and the dollar finds strength coming out of that cupping. The cup that's formed underneath the price floor. Here's the daily. And that is an appallingly bad look. Unless this turns very quickly into just a wacky one-off with a long wick tail, that then brings an enormous strength to exceed these highs, these channel resistances, and silver's looking pretty cooked. Well, gee, it looks bad because there's been a big bad candle. Yes, and if it's not going down, it's going up, I know. But again, using purely the evidence of our eyes, no reason to be long silver. And that's true when you look at the correlating assets with the positively or negatively correlating assets. There was our move in semiconductors, and again, look at this, the most amazing bull trend of all time on the weekly, barely a dent. All the panic and all the pants shitting, just remember, has been caused by this. Again, it's impressive in percentage terms. Oh golly gosh, look at this, semiconductors fell 11% in a single day. Yeah, here's the longer term view for context. RSI on the weekly is breaching 80 and pulling back a little bit. Strong markets breach 60, 66, 70, 80. Moving averages above the 60 level, above the 66 level. But has this been going on too long? Look at the reading on MACD. There's never been a higher reading. But you can see the drop off. Price volume trend look. Barely moving up. Sideways for all of this. A little chug action at the end. But incrementally higher than this high. It's not a strong move like this. It's not a strong move like this. Chugga. Incrementally higher. And we've shat our pants and dropped 11%. Will it continue? TBD. Keep watching this space. Now I'd be interested to see if there was the same signal as there was on semiconductors with the price volume trend on the Nasdaq. You see there's not. If you were just looking at the Nasdaq, the NAS 100, look, no divergence. There was on the momentum of RSI, there was on the RSI, and again look, left shoulder, head, right shoulder, breakdown. We're already approaching the kind of levels where bulls might otherwise be interested, the 40s, the high 30s. But no reason to be buying, no reason to be doing that yet. Just a blue bar on rock and roll. Gold on the daily, on the weekly, on the monthly. Maybe the rally's up. Maybe precious metals have had their run for this 20-year period. Maybe that was it. Maybe that was the precious metals bulls. And what a bull it was. Maybe the calls for gold, 10,000, 15,000, 20,000 are premature. We'll see. Crude. What an interesting beast crude is. We're still in the triangle of pain. You can see we broke down. I pointed this out, the triangle breakdown, the other week. We immediately rebounded. Where did we rebound to? Well, sort of like the breakdown level. The wicks on these candles and the breakdown level, roughly speaking. There it is on the daily. And you can see, we tagged the 50 and we bounced back down again. But with the oil now, again, if it's going to bounce, if this is going to be a 1, 2, 3, if we're going to resume any kind of upwards price action, it's got to find a low in here. You would go down on your lower time frames to find that, otherwise it's presumptively bearish. IEF, the ETF for Treasury bonds, sort of medium-term treasury bonds, 7 to 10 years. And again, it's just like, there's the reversal, there's the negative reversal, and we're, not even close. One has to assume rates will continue to rise, and IEF and TLT and all that will continue to fall. A second crude chart over here for some reason. I don't know why. I thought this might be a positive reversal, but then look what happened. It was the channel breakdown. Now, natural gas was an interesting beastie. Obviously, there's the reversal on the weekly. From this high to this high, from this high to this high, this high to this high. Even on the MCD histo, from this high to this high. And it's pulled back, but it's wicked up violently 1-2 times on the weekly. It's tried to go up unsuccessfully. But choppy price action. Again, like similar to oil, we finally got a significant movement candle that cut through. It's under this low. Again, there's your pivot point of resistance. We'll take that out. Presumptively bearish on the 4 hour. Messy price action because again, where are we? Well, okay, we're in the takeoff box. So, yeah. High time frame saying sell. This time frame, if you really wanted to go long, you would do it now. High time frame says sell. Cocoa. Rather like... Oh, this was cocoa. Oh, stupid natural gas. I forgot I've only got one of these two. Was that even natural gas? Did I just do a whole analysis on cocoa saying it looks like... Yeah, I did. I just did a whole analysis on cocoa saying it was natural gas. It's not natural gas. It's cocoa. So, yeah, it looks bad. Daily time frame down. 4 hour. If it's going to bounce, it has to do it now or else down. There's another... Again, a second pivot level would be about there. Honestly, what am I like? Natural gas, that was it. There we go. Now, look at that. You've got this wedge here. And this is sort of like, I mean, it's ugly, but... It maybe on the shorter time frame. But you can see that's a wedging action there. So you've got that as well. It's a wedge within a wedge. And we've broken up. And we've been contained at 3385, 34. We came in with these big divergences, and we've held support at 3095 to like 3078 on one test on the weekly. This candle low. But then look what we've got. We've got divergence. We've got divergence from this high to this high, and on these highs. So it's looking a bit poorly too. So one has to assume it's a little bit poorly and not really worth buying yet. Financials, not having the unhappy time everyone else is. Actually moving up, a little hammer at these highs. But if we look at the, if you look at the RSI, it's in your classic road to nowhere zone. Indecisive. There was a small bullish divergence. This lows, you did get the snap down, the snap up. So now you need to see it maintain above, I think, 5181. A pullback I'd like to see contained there. If XLF is going to be different than every other market and start having a good time, party time in XLF, and doom everywhere else, that's what it would have to do. Otherwise, maybe it will just meander around. Maybe it's a short like everything else seems to be. We shall see. So I've covered internals, I've gone over all this, I've gone over these charts, I've talked too much. I've called cocoa natural gas. I've given you my thoughts on the price volume trend indicator. I think we're done.